Alrighty. Cool. Looks like we're good to go. Alrighty, guys. We're about to get started here in just a minute. You guys know, per usual, just got to do our checks. Make sure everything's alright. Alrighty. It looks like we are all good. Cool. Alrighty, guys. Welcome back to MTVTA. I'm your guys' host, Trent Manager. All returning patrons, welcome. All my new patrons, of course, welcome back. Got a couple good stories for us today. It's going to be a little bit of a quicker stream today. I do head out of town this weekend for some work stuff, so it's got a lot of things going on today, but definitely didn't want to cancel our Thursday stream. Just a little bit shorter reads and kind of some brief overviews. But of course, we'll be updating in the Patreon, and full readings and everything will be available there for anything I, of course, find valuable and worth spreading out there. You guys know I try to make these short and sweet and most jam-packed information as possible, because I do know you guys are fairly busy. So let's go over our schedule for today. So we're going to go over some Twitter news. Willy Woo, one of our on-chain analysts, one of our favorite on-chain analysts, has got some things to say, of course, on Twitter. We're going to go into deep dive of that. Ethereum on exchanges. We're going to talk about the record lows staking. For staking, so exchanges are hitting an all-time low for Ethereum on their exchanges. I think Ethereum just has like $7 million in overall, a little bit more than that. I think it might be a little bit higher, but overall, exchanges are very, very low on Ethereum supply. So what happens when supply is low? The prices will go up and makes things more scarce. Also going to be going over Walmart's crypto experts and all the things they want to incorporate for their company for blockchain, cryptocurrency integration, innovation, and we covered on Tuesday their slot opening for their position of their product lead for their digital assets and management, which I think is awesome as well. If you missed that, you can go back on Tuesday. The timestamps are always below now. I think we started that a couple weeks ago. Just so if you guys want to skip around, I have no problem with you guys doing that, because I do know some of you guys here for different information. 50 years ago, this is a bit of an older article. A couple days ago, we had the mark of the 50-year anniversary of when the gold was not Nixon decoupled the dollar to the asset reserves of gold. So we're gonna go through that article real quick, kind of pick point some sections in there, and kind of explain how this is kind of very similar to really what's going on now with the cryptocurrency space, especially Bitcoin, which is very, very important of how we're going to continue to move forward. And also we're going to go over the Pennsylvania lawmaker floats blockchain technology bills. We know that Wyoming with not Kristen Sinema. Oh man, what is her name? Oh my goodness. My gosh, guys, my memory is just so bad right now. It'll come back to me in a second, but we're going to go over Pennsylvania's lawmaker and what they are trying to integrate, as Wyoming is one of the most crypto-friendly states in the United States in terms of DAOs and other cryptocurrency laws for their residents. So let's hop into our very first one. We're going to go over Willy Woo's analysis real quick. So he goes, in a macro cycle context, long-term investors are still climbing towards their peak accumulation, which market bottoms early signs to me that the bull market may continue into 2022, and BTC is in the process of breaking free from the 4-year internal cycle from the halvenings. So this was pretty interesting. If you guys don't follow Benjamin Cowan, I really highly suggest. He's a great technical analysis guy with a lot of different ideas in terms of how the technical charts go, a lot better than I am, in terms of looking at the charts. We cover the charts briefly to the best of my knowledge. I'm not, in there drawing crazy, retracement averages and such. It's kind of more just basic TA. But getting back to the tweet of how, the lengthening cycle theory applies, and how the halvening is drawn. So you guys know that we have our 4-year halvening, so that just does a supply shock in the network, so cuts BTC's mining half time in half. So instead of getting 16 BTC, you can cut that in half, and that is what it outputs per the algorithm. We've covered that quite frequently. If you're confused about how BTC mining works, we got old videos for you to go cover, and that should make a lot more sense to you. But really, in the sense of this tweet, I've agreed with the lengthening cycle theory, and we've talked about it on here also, that is definitely a possibility, and that we've seen it even with I'm a big follower of Ben, so I do agree with a lot of his points in terms of diminishing returns and and so on as we continue to move forward, as the adoption continues. And honestly, the reason for that, I would say, is because if you were here, I know some of you guys have been here a little while too, but if you really here in that last cycle, like 2017, 2018 cycle, is that the institutions were here, but not in the terms of how they are now. It was a lot more speculative back then. We didn't have decentralized finance. We had all these apps, but we didn't have any use case for them, and as to what they were going to do and how they were going to perform their actions. But the important thing now to recognize is that not only do we have big money, but the hedge now and the educational gambling bet that these dApps and this technology and all these projects will continue to thrive as the ecosystem matures. We crossed over $2 trillion market cap this week as well, first time since May, which I thought was of course impressive. But in terms of asset class, we're a very, very baby asset class, and we don't have a big handle in terms of the stock market and their liquidity. So as we continue to develop, $2 trillion seems large now, but of course, once we start getting up to like 10 trillion, that's where we could start, less volatility will occur, and that of course that makes it easier for the market to sustain itself in a more, I guess, a more normal manner. We know crypto's volatile, and there's a reason for that. It's just by the market cap that we have. It's very easily moved by big players and big institutions and others. But the stock market is too, but not nearly as bad as you would see something in cryptocurrency. But long story short, I do believe in the linking cycle theory. I do believe that we will bleed over into the next year in terms of our bull market cycle. I don't think that we are going to continue I believe my thoughts have changed quite often, is that I believed that history repeats itself. I believe we may have macro bull markets or bear markets, just like we saw that drop back in February, and we had from it was back in March, I believe, not from the COVID crash, but March till about June. I might be getting my dates mixed up, but the term of the conversation is that I don't believe that we're going to be going back into this 4-year cycle with all the adoption and the promise that a lot of these big guys and of course retail now has with a lot of these projects. I do believe that we're going to be breaking the cycle in terms of we will have bear trends, but I don't think we're going to of course lose 80-90% of our value and sit there for a year or two. I think that's probably what I was really trying to get out of there. But definitely I was oversimplifying it just for a minute, but I think that's where I think we're going to be heading. So also going over to Ethereum on exchanges, hits a record low staked Ethereum near $7 million. So we'll check up on the burn also before we get off the stream. But we knew that with the merge and the EIP updates coming with the Ethereum network, we knew that a lot of the shifts were going to be coming. We know that the burn happens now. So as transactions get utilized on the blockchain of Ethereum, these fees are burned. So every transaction, every use in the Ethereum network, NFTs, decentralized finance, just sending peer-to-peer, we burn a portion of that Ethereum, so therefore making it more scarce, and that kind of piggybacks on our proof of stake notion that we're moving forward. So of course, people ask, why would we implement the burn, if we're still on proof of work, and how is proof of stake, and how does it work? With proof of stake, we're just taking out the miners and replacing them with validators, and of course, if we have the burn mechanism in play with Ethereum, it now kind of it piggybacks off one another. You can have the proof of work mechanism that miners mine Ethereum and then have the EIP burn and then expect to combat one another. So you're burning ETH, but then you're mining more than you burn. It just wouldn't make sense. You see what I'm saying? But when you get into the play of proof of stake, and then you have the burn. So instead of miners mining new Ethereum, and they are rewarded for their incentive of using those GPUs to mine that Ethereum. Now the incentive is that validators and stakers will not just verify transactions on the network instead of minting new Ethereum. So the incentive now is to secure the network as being a validator. So that's the importance, and I hope that made sense. We've covered that quite a bit, and if you're confused, we've got a lot more in-depth videos on my channel, and of course elsewhere in other materials that could help you understand that. I just don't want to try to be broken record and repeat things that I've already repeated this week for those who have been sticking around. But really, you can see just on the chart here, we'll go on Twitter as well, but the ETH on exchanges, it's on a massive downslope. I mean, this is the lowest points we've seen for a very, very long time. And, there are people hedging their bets with Ethereum, and we've talked about the flippening and all that. So, there's a good chance that, it's in the cards. It's definitely on the table that, Ethereum could definitely flip Bitcoin to market cap. Absolutely. It may not sustain itself. It may not stay above Bitcoin forever, but I always stress on here that it's important to, hedge your bets on both. We know why Ethereum could possibly flip Bitcoin from its use cases from NFTs, decentralized finance, tons of use cases that the Ethereum network can utilize, not only just to store value, which is incredible. And there's a reason we talk about Ethereum so much on here, and of course makes my job possible. So long story short, reasonable volume of Ethereum finding its way onto a 2.0 network, staking contracts, preparing for network transfers away from proof of work and towards the proof of stake. Ethereum 2.0 milestone, becoming a lot more apparent. We got valuations of $21 billion of current price. Beacon Chain Explorer reports slightly hour lower figures, $6.7 million in ETH staked, but it's currently record high. Yields of 5.9 to 6% a year. I mean, it's pretty great. We've talked about all the staking options and passive income that you can prove on your cryptocurrency. You don't just have to hold it in Coinbase and have it go down. There are staking mechanisms of tons of different projects. I told you guys BlockFi. We got Atomic Wallet. We got tons of ways that you could lend out your cryptocurrency and or stake and receive great rewards passively for pretty much doing nothing and just for being an owner and supporter. But that's it for this article. Wrapping up. Long story short, we're kind of in like this rumble phase, and I know Ethereum. I'm still staying true to lots of Ethereum's potential as we move forward, and also hopping over to Walmart. Walmart's crypto expert Vay Kane reveal a future crypto strategy. So we talked about this on Tuesday, and how they put out their crypto lead for Walmart's sector of their cryptocurrency lead. So we went over LinkedIn requirements, and they're 10 years this, and a bunch of other requirements that were pretty crazy for people who had been here for a while. I mean, I don't know anyone with I know some people with 10 years experience, but it's very slim to none. You're going to find an individual like that. But really what they really broke down here is just they're looking for, full integration in terms of, integration for payments. I know Walmart was kind of slightly on their blockchain side for supply management. That's a big thing with the developer side of work. Hyperledger and blockchain is a big of it is supply chain, healthcare, and soon to be real estate. But blockchain attacks a lot of different sectors, and how big enterprises and corporations can manage inventory, pay for employees, sensitive data, and a lot of other really critical things that a database or other technology may not be able to handle. So really moving forward with Walmart, we know that Amazon, of course, their AWS, we talked about this on Tuesday as well. I'm kind of doubling back to this as well, just as they kind of give an updated ideal of what they are going to try to achieve out of cryptocurrency and blockchain. And of course, I think every major enterprise and corporation will have some sort of bracket and in their sector for blockchain or cryptocurrency. So really what I'm seeing here, I would not be surprised if Walmart continues to, you might see some integrations here for, payments. You might be able to pay your groceries with some sort of cryptocurrency, maybe some USDC, or, definitely some Bitcoin acceptance or some Ethereum. I see Hyperledger Fabric and blockchain technology definitely being integrated, full time, if not already, with Walmart's supply chain and all the things they have to keep track of. But they're a super giant. Walmart is no, small player in terms of getting on top of innovation and how they're going to be the best versus their competition. It's crazy that these guys still have competition from small business and from big business. If someone smaller can do what they're doing better, it may not take a big hit out of them, but a lot of these guys are greedy and they don't they like to be the big guys on the block all the time. So this is something to look out for. Definitely pay attention, because Walmart is they've got something in the works, and there's a reason that these guys do this. And of course they can't tell us everything about what they're doing, but it's very important to pay attention to them for sure as well. And also going over to our 50-year going after gold, the dollar must go for crypto. So this was actually a really good read. It's a bit longer. We're not going to read all this, of course, but this went over the integration of just after World War II, when Nixon applied the gold reserve to not be equivalent to the US dollar. So basically taking away the dollar, backing gold as an asset. So this was a big turning point when we were switching. We had already had dollars for quite a while, and by no means I wasn't even alive or even close to being thought about for this. But just off my history touch-up of how things really governed during this time is that, after World War II, war is not very good on an economy for either side, even for the third parties involved, people who are help supporting the war. It's not a very good time. You got a lower GDP, and there's a lot of things you have to do in the government to sustain, not only your budget for war, but also your civilians and individuals who have to, give up certain things to, whether it be higher taxes or, longer hours of work or different policy implementations. So moving forward from here, why this is so important for the crypto space is that we're seeing a pretty big narrative shift of how gold was just in this time. So we realized that the dollar was creeping around. It was there. I think the dollar had been there for at least here. Let's do a quick look when the US dollar was really let's do this. I know it's been a while. It's been a long time. So yeah, 1792, been there for a while, absolutely. So you can see over a couple hundred years. It of course stood its test of time for quite a while. And going back to our chart here, lost my train of thought, but the dollar had been around for quite a while, and you can kind of see kind of what we're talking about here. So in 1792, a couple hundred years, we translate to gold. Everyone's like, oh my gosh, gold, big and shiny, really great store value. And, the dollar was already not getting towards its end, but it had already been pretty old. People had had the dollar for a while. Gold had been stepped in, had been a great store value, for hundreds and hundreds of years. And, that's just something that the government didn't really want to, back anymore. There were some concerns of, transport issues. I mean, just everything about gold is very, very difficult. The mining is very expensive. The holding is expensive. Keeping it like in good condition, like just like wine, you can't just like leave gold like in a room and like expect it to do well. Like it gets, you kind of really got to take care of it. And paper, on the other hand, dollar was not like that. You have to keep that crumpled up, and you can keep it really wherever, and it it stayed where it was, and it still held a value, whether it was crinkly or not crinkly, or cut or not cut. So the big narrative here is that not only with the technology rise, but the shift of where we're going with utilization technology, and how it's going to be easier to transport things, especially pay for things, and this digital age we're already in is now being tested. So I notice now, I know you guys probably do it too, like none of your friends carry cash. Like none of my friends carry cash. Like it's crazy. Like, hey, did you got $20? Like no. Like what's $20? Like what? Like you keep cash on you? It's becoming a very like obsolete thing that people are doing. So my main connection with this was that pay attention to the monetary shifts. Especially with coronavirus and everything going on. This was a black swan event that caused a lot of uncertainty and issues that may have not been apparent at first, but now are really apparent, of how supply chain was affected, how payment systems were affected. I mean, there were a time, you guys remember, like you couldn't even, like I remember I couldn't even get cash to the cashier, during like prime COVID times, because like they were afraid of the disease transmission. Me touching that dollar and how many other people touch that dollar, and then it being transmitted around, like that was a big fear. So versus electronic payments, it's you kind of take out that issue right there. And of course, with speed and transparency and a lot of other factors that we cover on this channel, you could see how that becomes a better replacement. So alrighty, that's pretty much it for this one. I got a little ranty on that one, but I had to cover some good points in there, because a lot of it pertains to what we are talking about here. Also going over, Pennsylvania's lawmaker floats blockchain technology in bills for their next Senate pass. So Rep. Napoleon Nelson, I need to follow him on Twitter. I don't believe I follow him, but he had talked about PA's integration for blockchain technology, of how it's going to utilize their state. We've seen that with Miami. We've seen that with Wyoming. We've seen that with a lot of states here in the United States, really adapting their laws to not only raise their state capital, but of course open up jobs and make their states and cities more appealing to newcomers and individuals who are looking for career paths and switches. I mean, it's crazy in the United States. Like, we're the United States, we've got 50 states, but, realistically, when you go to each different state, the rules are very different. I mean, the whole judicial law overall, like, down, not killing and robbing, of course, the laws stay the same. But in terms of, of course, we have corporate income tax. We have the breakdown of state and, state tax of, how much, your business is taken from each state. We know Texas and a lot of other states are very friendly for big corporations. So it's pretty funny. I always think it's crazy how, we're the United States, but we always have such different, bracket breakdowns when it comes to per state, which I think is always interesting. But realistically, how they are going to be moving with this, he has a quote here at the bottom of his press conference. At present, blockchain represents a regulatory gray area, as many of today's laws and regulations do not envision the level of technology we now enjoy. Nelson said it in the news release: to keep our Commonwealth at the cutting edge of technology innovation, I've introduced 2 measures that will help develop a regulatory framework to support blockchain technology in a way that both promotes business development and protects consumers. So just kind of like what we talked about. They understand it's a gray area. They know that this is not something that's in full swing yet. We really don't even have clear laws on how things are going to be governed, which is frustrating, not only from our big guys, but just overall, trying to get innovation continued. But, we will continue to work with it, and we'll continue to, get better. And I believe that things will drastically change. In that bill, we talked about that a couple weeks ago, when that was kind of a big little shake to all of us of, how could these guys do this? Like they don't even know what they're voting on. They're making things up that can possibly hinder innovation. And, just like we talk about, from time to time, the U.S. doesn't like to be behind things, and we like to be number one in everything. But realistically, we are getting absolutely swallowed and spit out in terms of our innovation and technology adoption. China's killing us. I've said it plenty of times, but it's true. They've the work ethic. Granted, their cryptocurrency laws and that, but there's a reason that they don't want that. They have their digital yuan pretty much set up and ready to go. So, I just brought that up just for the fact of, the laws and regulation really is frothy when it comes to, our guys. These guys just don't really understand what they're voting on. But this is where the per state comes in, like Pennsylvania and Wyoming and other states that, hey, we don't agree with our big guys that govern this country, but we are going to do our best in our state to make it accessible to you to, come here and succeed in your business and your desires, if that is something you would like to do. Sorry if that was really loud. I totally forgot the chart was up here. But that is it for our readings, guys. We are totally good on that, which is a quick swip. So let's go into our BTC log, or BTC chart real quick. Let's look at how we're doing. Sitting at 45, pretty good. I don't see anything wrong with this. It won't be anything too in depth. We're retesting some old pump levels. So pretty much some levels that we did not make resistance at, or we did not flip into support. Let's see how large this candlestick was. Let's see, we went 20% in. Let's see. Goodness sakes. See how quick that was. That was like 30% in 2 bars, so 2 days. Pretty nuts. So that's not acceptable for building support levels. So that's literally what we're doing right now. We are establishing 45 as a hard support. And if I'm going to be real, if we were to slip into a bear market like we really do, and we lose 60-80% of our value, just like we did, right here, which was something that, was obviously apparent because we're still in it. But, if we lose something like this, over the past 127 days, we are down. We are down about 59%. We were down a lot worse than that. So, you guys can definitely understand the metrics behind this. But getting back to my point, I think 45K, if we are to go whatever price target we are, I believe that 30 to 45K will be our baseline. I don't believe firmly that we will be slipping under 40 if we do establish this as hard support. We've already done that, as you can see here. We did this for a while. So we did 42 for a bit. We did 42 again for a bit. Sorry, I got that was a bit wide. Sorry, guys. We did a bit up here. We did a ton up here. We did a lot of 42 bouncing. I know that was 39, but you can kind of just see how we've really built this a bit stronger of how we're moving forward. So, yeah, I don't see anything wrong with this. We're just establishing a good area so that if things go south, like sometimes they do, and just how market sentiment is, we should be okay. Absolutely. Awesome. And we're over the ETH chart as well. I've had this up for quite a while. I don't think we've changed this too much, but Ethereum sitting at level 3. We've seen a absolutely massive rally, and now we're seeing a bit of a choppy consolidation up here as well for how Ethereum is doing. And if I'm going to be real, I do believe Ethereum will decouple a bit from Bitcoin, but it's very hard to really say that because Bitcoin really does whatever it wants. It doesn't. You can't tell it what to do. It won't listen to you at all. It'll just do what it wants to do, and if it does it, it does it. If it doesn't, it don't. So, wow, that's pretty. It's pretty interesting. Yeah, we just definitely got to see how it plays out, and I'm very hopeful. Of course, I don't like doing the short-term stuff. We just pull up the charts just to kind of see where we are for the week, or how things look at the long term. I always like when in doubt, just zoom out. I always just love looking at this chart. Such a crazy time. People really thought. It really is crazy. But alrighty, guys, that's pretty much it for me today. For those, like and subscribe if this helped you a ton. Share with friends or family. And of course, if you're considering joining the Patreon, would love to have you guys in there. I think my lowest tier is $3. So $3 a month, that comes out 10 cents a day or something. So alrighty, guys, thank you so much for your time today. I will see you guys on Tuesday, and pay attention to the Patreon just in case I do have some update videos. Like I said, I will be out of town this weekend, so it may be a bit quiet this weekend just because I got to handle some other business. But thank you guys so much. I appreciate it. I will talk to you